Hey everybody, good morning. It's Angelo, Christian Financial with Real Estate Insider. You know, we're cranking out these Zoom podcasts now. We're in this quarantine, and today we have a very special guest, Mr. Robert Lewis with Gorilla Mortgage, and talking about SBA loans. Everybody, this is the hottest topic. If you're a business owner, you're an entrepreneur, and you have a business, and maybe your business is even shut down, SBA has come to the playground with a ton of capital, making loans. And Mr. Robert Lewis is actually the SBA expert. And so we have him on the show. Welcome, Mr. Lewis. How are you, my friend?
Hey, we're just sitting here enjoying a nice virus.
I love that. Does your wife make that, or where did you get this the face mask?
Actually, my daughter Taylor has made these, and she's been taking them to restaurants and to hospitals. So this has kind of been her give back to the community.
I love it, man. That's great. My wife has been making those and giving out to the nurses too. So it's been really cool. So awesome. I like that, and it goes good with America. So
yeah, brought out my eyes.
Yeah, I like it. So that's awesome. Taylor's doing that. And again, thank you so much for being on the show today. We obviously, as you know, as an investment lender, we cater to a lot of self-employed, a lot of business owners. And, you know, you and I have some SBA deals that are going, and I thought it would be a great topic to discuss about SBA lending in the current environment that we're in right now. And a lot of people, even myself, are kind of naive to the SBA, don't really know what it is. I mean, I have a general overview. You've been in the industry for almost 3 decades, and, you know, and obviously you're a guru when it comes to, you know, commercial and SBA loans. So today we want to talk about, you know, what are the opportunities with SBA? What is an SBA loan? If we kind of do a Q&A with you for a lot of the viewers that may not even know that they're eligible for SBA, and how it could actually help them. So if we could kind of talk about, you know, first off, you know, Mr. Lewis, what exactly is an SBA loan?
So an SBA loan, and for those that are, you know, familiar with mortgage, I always reference it similar to an FHA, where an SBA loan is a commercial loan for owner-occupied commercial owners, business owners who own their own business. But the SBA is a loan that gets a guarantee. So if a lender makes a loan, as of right now, there's, you know, they're guaranteed 75% of that loan in the event that there's a default. So it incentivizes companies, banks to maybe take a smaller risk on a loan and making a loan decision, in that there is a guarantee in the event that the loan goes awry. So we've been, you know, so for, you know, you and I actually have some loans we're working on, hotel loans, some other loans where banks are outright no, but because of that extra guarantee and that extra kind of help, it takes some risk off of the bank. Right.
Okay, so let's just use an example. Like you and I are working on a $4 million hotel. No one in their right mind, from a banking standpoint, during COVID would make a loan to a hotel because they're shut down. And obviously our customer is being able to essentially go through the process because SBA is going to put their blessing on that loan for the lender.
Right. Correct.
Okay. So if we have a $4 million loan, and is that what the guarantee is, a 75%?
Right. So the bank will take 25% of that risk, where the SBA will be looking to, I hate to say the word eat, but looking to guarantee that 75% portion in the event of a liquidation.
Right. So basically what that means is that of the $4 million loan that we're doing, the SBA will guarantee $3 million of that, and the bank will be on the hook for the other $1 million in the event of a default. Versus a conventional loan, if the hotel went sour, the bank could be on the hook for the full $4 million.
That is correct.
And that could really hurt the bank a lot. So, okay.
Yeah.
So that's the idea behind the SBA. Now you mentioned something at the beginning. You said owner occupied. So if I'm an investor, I can't use SBA.
Yeah. So SBA and there's some oddness to it, but an SBA is for a business owner. We're not going to use this on flipping homes. We're not going to use this on an investment house. But we can use this for if I own a flower shop, or if I own a restaurant, if I own a hotel, if I own a storage facility. So there's multiple aspects of where we can use the SBA, but a business that is not actually being occupied, or somebody sitting still. You can't use it on an apartment. Apartment is long-term rentals, but we can use it on a hotel, which is short-term stays. So that's where some people will sometimes get confused on the where's and where we cannot use it. But yeah, definitely.
Okay.
Go ahead.
No. I'm just thinking, because I mean, you're educating me too, because I mean, I haven't done a lot of SBA. I've had SBA loans personally, but I don't know like the different types. So I want to, obviously get into it today with you. So I appreciate you kind of, sharing. So let's say, for example, that you have somebody where you and I have come across clients, and I'm sure that you have, where it's a owner-occupied retail strip center where he's occupying a portion of the strip.
Right.
And the rest is leases. So how do we, I mean, is that okay?
Yeah, if there's a 51% ownership of it, if the owner occupied is within 51%, then we can definitely look at that as an owner occupied, and we can look at that and have done those as SBAs. But if somebody's coming in at a 49% ownership and the rest of it is income, then no, that would not qualify under what we call an owner occupied or an owner occupied SBA.
Okay. That makes sense. And then, is there any credit score requirement for SBA?
So, and that's an off question, because some banks will be a little bit more lenient and use their PLP. But normally, what I've seen, most banks want to be at the 650 or above, and then some banks have guidelines where they're 700s. So we will look for banks and community banks that have that spectrum of being able to go to a lower credit score.
Okay, so let's just say a general 650. Is there any prepayment penalties on SBA loans?
You can actually use SBA loans for franchises. You can use it for a leasehold. And within a leasehold situation where you're at a 10-year loan, then no, there is no prepayment penalty. There is prepayment penalty in real estate as we start going into a longer loan above 10 years. And so you can see them from various positions of a 3-2-1. There's another program of SBA called a 504. I don't think we'll go heavy into that today, but that is another program where you'll have a couple of prepaid penalties that you can choose from, depending on where the buyer or the borrower is comfortable.
Oh, so there's more than one SBA loan program? Yes,
there's SBA 7A, which is what we see more of, and then you have an SBA 504, which involves a CDC where they take on 50, a portion of the risk. Which is another way of doing real estate and taking away layers of risk for the bank, to where they would look at doing loans that normally they probably wouldn't look at.
Gotcha. Okay, that's interesting. So I didn't know that there was different types of SBA loans. So okay, so the 7A is the most popular.
Correct, because with SBA you can also do a lot of things. With SBA, you're looking at the total project cost, and you normally have to walk through borrowers on that. But with the total project cost, the loan to value or loan to cost comes off of that. So we can build in working capital, we can build in soft costs, marketing, attorney's fees. So we build into the whole aspect of the loan. And then we take our loan to cost based off the entire built-in of what it takes for me to own and operate this. So we're doing a distillery right now, which is a leasehold. It's a 10-year loan, but we've built in everything from equipment to marketing to 6 months working capital to allow them to be able to get in and operate. So it's a stronger use. Where in conventional, I'm not building in working capital. I can't build in soft costs. With a regular standard bank loan, I'm really just looking at the asset, basing my loan to value, loan to cost off of the asset.
Okay, can we grab that example right there and expand on it? The distillery.
Yeah.
So okay.
Okay.
if you don't mind, I got a couple questions on there. I'm sorry to interrupt you because I think the viewers are going to want to know. You talked about some very important things. So if you could just expand on it, because I know that you're an expert, but I don't think the viewers know too much about SBA. So you mentioned a 10-year term. Is the amortization 10 years too?
Correct. And this is a benefit over kind of standard franchise loans or standard equipment loans. Most loans are going to see a 5-year to 7-year, where an SBA is a 10-year. And so that amortization is would be on a 10 years.
Okay, so they're going to have a pretty hefty payment then.
Off the 10-year, it actually helps them. And we actually saw this on a client you and I were working on yesterday, where the amortization actually ended up being cheaper with a higher rate than a short-term amortization in the lower rate. So to be able to do a 10-year loan versus a 7 to 5 is actually a benefit and strength of SBA.
Well, no, sure. But I guess because a lot of loans, they have a balloon where it's due, and then the amortization is usually 25 or 30. But so SBA doesn't go out to 25 or 30-year am.
We'll say now we're talking about two different loans. And again, there's more strength to the SBA. So when we talk about 10 years, we're actually talking about, a leasehold, where real estate, we can go 25 years.
Oh, okay. That's a good point. So leasehold 10 years, real estate longer amortization. Okay. And then the other thing you mentioned, building in working capital, that is very impressive. So on this distillery, they built in 6 months of working capital now. And what's the LTV on the distillery?
So in the distillery, it's a startup, and the bank is allowing them. We got them approved at an 80%.
Okay.
So which is, and again, a startup is usually a bad word with lenders.
It's amazing, yeah. I mean, yeah.
And a startup distillery is usually a bad word with So but being able to put this under an SBA package and building everything in became a benefit to this particular bank, and we were able to get him it's a $1.7 million loan. Right.
So that's pretty cool though. So because I know for darn sure, and there could be entrepreneurs on here that want to start a distillery or a golf course or whatever, so they have an opportunity, an outlet, even during COVID, to talk to you, to talk to us, to get an SBA loan, even if they are a startup. You're saying?
Correct. Yes.
Okay. Because I know that a regular traditional bank would probably deny that because of being a startup, and you're definitely not going to get working capital included in your loan at all. I mean, that's unbelievable. I did an SBA loan about 15 years ago on a restaurant, and they did the same thing. Right. So now let's talk about some of the, so we know but the LTV on this is 80, but the max LTV could be higher, right? Isn't it 90, the max LTV?
Well, and again, when you're building real estate, so at real estate, you can do 90, which a lot of our clients, will call in looking for that higher loan to value on real estate. So on SBA, you can. Now, again, because if it's startup on real estate, your bank's probably going to be more comfortable coming in at 15% down. But if it's an acquisition of existing, or if it's an expansion of existing, if it's, if they have the experience, then you can come in at 90%, which is very strong to do a 10% down real estate loan.
Right. So basically max LTV, if there's real estate, is 90. If it's leasehold, you're probably 80, 85, startup 80, 85. Now, the types, can you do, so you can obviously do purchase.
Right.
You can do refinance. Can you do refinance cash out with SBA?
It's done with some tricky guidelines. So it's a case-by-case look, and it's a little bit more complex per scenario.
Okay. Can you do ground up construction? I guess you could.
You can, and then depending on the bank and their ability to do that. So yeah, so what occurs there is you actually end up, the bank will actually do the construction loan. The SBA would be their takeout. So you'd have probably, let's say, hypothetically, a 12-month interest only for construction, and then the SBA, then we would roll into their SBA loan.
Wow. Okay, so the initial loan would be conventional with a bridge short term, and then the takeout, the SBA would come in. That's very interesting. Okay, right. So like for a daycare, right?
Yes,
Or
and we do a lot of daycares.
yeah,
Yes,
daycare, or maybe geez, maybe even like what, a donut shop. I mean,
my favorite.
my favorite too, the apple fritter, man. I can't leave it alone. Um, all right, this is very good information. And then now, so, and then obviously, I guess you could do like, what was the distillery an existing building that they're kind of rehabbing, or is it?
Yes, yeah.
Okay,
So it's being hold. Yeah, it's being so the funds will go to leasehold improvement to convert this into a distillery slash a little restaurant, bar type setting. You have the working capital to allow them revenue to be able to have be able to handle payroll and expenses during this time period. They had some soft costs built in, some marketing dollars built in. So again, really looks at the whole project as a whole, and then that's where we base our loan to cost off of.
Gotcha. And then the other thing I wanted to ask you in regards to, I want to kind of go into some of the guidelines, because I think it's important that we talk about this. Because a lot of people, when they do podcasts, they just kind of do like a glossary. I want to go a little bit deeper with you now. So in regards to, and I'm just kind of going into when I've closed a few SBA loans in my lifetime, not as many as you, but in regards to, I know it's a fully documented loan.
Right.
And so there's this full recourse. Is it full recourse or is it non-recourse?
They will be full recourse. Yes.
Okay. So that means that the sponsor or the borrower is liable if the loan goes into default.
That's correct.
That's right. So it is a full recourse loan. So that's important and you have to disclose, obviously, your credit report, your tax returns, your financials, all of that has to be disclosed, right?
Right. Personal financial statement. And on the personal financial statement, you do want to put everything on there. I've had many people leave off liquidity because they're afraid of I don't know why, but yeah, normally in order for this to be a smooth approval, you want to put everything you can on your personal financial statement. You want to be able to to provide tax returns. You're going to have a resume. We're going to look at a 3-year projection. So there's a little bit more work that does go into this. But with our company, we're able to help build business plans and help build.
Oh, really? You guys help with the packaging? Wow.
Yes, yeah, we can handle the package, but there's also a lot of government agencies in cities where the government pays a group at a college like University of Houston has here in Houston, Texas, has a group that is set aside to help business owners to do those or even put together their SBA package. Yeah. And we can help direct people to those, or we can help them ourselves.
I see. Okay. Wow, that's strong. You guys help with the loan structure, because we actually did a segment on that a couple months back, where a lot of loans get denied is because customers, they're not able to put their package together properly. They got a great idea. They have a distillery, they have a bakery, restaurant, whatever, but then they can't even, put their stuff together, and then so the deal falls apart. So I think that what do you guys at $75 an hour or something like that for packaging or something? Is it?
Yeah, we do, and where that benefit comes in, I think you and I have had multiple conversations about this, but the banker that you go to is more or less your attorney. So this is your person representing you to what we call the approval.
Right.
The loan committee. Sorry about that. So when you have a loan, you're normally going to go to a loan committee. So it's going to be a lender talking to 10, 12 different bankers to tell them why they should get this done.
Right.
And so if you go into a loan committee and that lender hasn't done a good job putting together the package, putting together the what we call the 5 C's of credit, if they have not done this, they're going to go to loan committee to fail. And sadly, we see a bunch of loans that come our way that were at a major bank that were sat there for 6 weeks and were later denied. And so we've been able to take them, redo their package, show the strengths, show the pluses, show the benefit, and then take it to another bank, and then in no time, get them approved.
Right.
So a lot of it depends on your representation. And a lot of people don't know that, but definitely your banker is the key in helping you get something accomplished.
Yeah. No, I think that's a very important thing. And I think a lot of people skip over that, where they just think they're just going to get a loan, that they're going to get money. and it doesn't work like that. So that you have to, the loan package and the structuring. Now, going back to the SBA and the guidelines and being fully documented. Now, in regards to tax returns, I get a lot of self-employed people say that they don't think they can get an SBA loan because they have write-offs on their taxes. And can you kind of talk on that? Because I've seen, and I've closed SBA loans for self-employed that had negative income, but they had very high credit and very strong liquidity. So in that sense, it's different than like an FHA loan where you have to debt ratio and you have to have a positive income on your taxes. Is it true that you can get an SBA loan and still have, write-off? There's a lot of self-employed people, they have write-offs. So
yeah, and that's going to be a case-by-case basis, but you have to understand that you are dealing with the government. And I had a conversation last year with FHA out of California with a borrower we were trying to get done, but for 5 years straight they wrote off and had losses. And the gentleman at SBA told me, he said, "You understand, I rely on taxes to pay my salary. So if somebody doesn't want to pay taxes, we're not looking at them." And but we've also seen in the same cases where, depending on what those deductions are, whether it be an interest, whether it be depreciation, there are some things we are able to add back. And so when we add those back, it does show income. We are able to show somebody who has paid taxes. And then we also use projections. Let's say somebody has not been doing strong income, but this loan is going to help grow their business. That's where we use those 3-year projections we put together to show an increase off their current financials for future financials. And we've gotten a lot of loans approved that way as well.
Gotcha.
So losses are not always a bad thing. It depends on what those losses are and can we add them back to income.
Right. And then so a pro forma is essential for an SBA loan.
Correct, Key.
Okay.
And then you're also going to have those instances where somebody does have a loss because of a one-time expense. Harvey was a one-time episode when Hurricane Harvey hit the coast.
Yeah.
Somebody who refurbished their building or put a major sign out, and that was a $50,000 hit to their income. Well, we're able to go back and show that as a one-time hit to their income, and then be able to add it back to income, as this is not going to be happening every year. It's not reoccurring.
Yeah. Good point. I like that. That's a very good point. So, okay. And then as far as any seasoning for bankruptcy or foreclosures, or any seasoning from SBA defaults, is there any seasoning for that?
Ask me that again.
Yeah. So it's like, I'm just thinking about FHA loans and government loans. Is there a seasoning requirement for bankruptcy, SBA defaults? What's the seasonings for that?
For somebody acquiring that property or somebody in that currently? If somebody's acquiring the property, we've done it with no seasoning in an acquisition.
So let's say let's say someone had a bankruptcy. How long do they have to wait to apply for an SBA loan if they had a bankruptcy?
Yeah, and I hate to make a credit decision over here, but 9 times out of 10, that's probably going to be a decline. Now, if somebody's 7, 10, I did get somebody approved that had a 10 years back, but it really depends on the bank, because the bank is making the decision, and every bank has their own somewhat guideline take off of what we call the SOP, which is the SBA guidelines. So some banks will have an automatic. If they have a bankruptcy, it's a no. So really it's going to depend on the lending institution, and we know which lending institutions are more lenient than others. So we have gotten past bankruptcies approved, but we've also taken on the banks who have said, no way, we don't do bankruptcies.
Regardless of the seasoning.
Correct.
Wow. That's interesting. So I guess one of the benefits of Gorilla and you is that because you're a national lender, you could do SBA nationwide, and you know which banks, what funders to allocate them to based on the customer's profile. Right.
Yeah. Because one misconception that we see is a lot of banks will use the SBA as their reason for denial. For example, I had a gentleman, call me last week on his startup and so, hey, I was just declined because the bank told me that SBA does not do startups. So they declined me. Well, that's not accurate. And knowing the bank, I knew the bank's guidelines. The bank has that guideline, but that is not an SBA. So we do see a lot of misconceptions where SBA does get blamed for things where it's not accurate. So there are opportunities where we know lenders' guidelines. We know some are more liberal, some are more, more extreme, some are, extreme conservative. So we know who to take to which bank.
Right.
For example, in the distillery, I took them to 3 banks. We got 3 approvals on the distillery. We knew not to send it though to X, Y, and Z banks.
Right.
We knew we
Right.
wasted a lot
So that's a really
we're
powerful.
pre-active.
Yeah, guys, if you're out there listen to what Mr. Lewis just said. It's very powerful because, like, we did a deal, or we're doing a deal for a customer in Orlando, an SBA loan for a hotel near Disney, and his bank is shut down. They do SBA loans. Why is he dealing with a lender in Houston?
Right.
Because we're still funding loans. We know how to place them, and his lender, they shut the doors. So you might be watching this video right now, and you may be an attorney, you may have a kiddie daycare, you may have a bakery, you may have a restaurant, you may have a hotel, and you don't know where to place your loan right now, or your bank is saying they don't want to do hotels right now. We can figure out potentially how to do a hotel, maybe with an interest reserve or some way how to structure that loan with the right lender. That's a very powerful thing. If you're, whether you're in, it doesn't matter if they're in Hawaii or New York, it doesn't matter, right?
No, it does not matter. Okay,
so even though we're physically located here in Houston, everybody, we're doing deals nationwide. So let me ask this, Rob, do you have to be a U.S. citizen for SBA?
Yes, yeah.
Okay, so you couldn't be basically here on a visa and get an SBA loan?
No.
Okay. Okay. Well, it was a good try.
Yeah.
And so now let me ask you this: in terms, this is a question I've always had people ask me, is collateral. So, because I've heard that the SBA, they try to get their hands on everything. So,
right. If they see it, they're going to want it.
Okay, so do they want the jewelry? Is that why we got to be careful what we put on the PFS? Because
they're probably not going to come after your watch. Okay. But if they do see that you have, property, something that they can lean.
Do they like green Ubers?
Hide everything.
Okay. If they want a Lamborghini, they can come get it. So.
Yeah, I want your Lamborghini. So yes. But so what happens? And you got to understand. The SBA is presenting that risk of the guarantee. And, a lot of times, especially on the leasehold side, they're technically unsecured. So, for example, say the Jimmy Johns that I financed, you're talking about a $450,000 loan, but what's the real collateral? There really isn't anything. So if they see that you have a second home and it's, got 30,000 of equity in it, that might be something that they want to put a lien on to protect that $400,000 loan. And does it mean that you have to have 100% collateralized? No. Would they like to be one-to-one collateralized? If we can get there, it definitely helps for loan approval.
Mm-hmm. Okay. Wow. Okay. So it just depends. And I guess again, it's all about risk balancing if they see it. So, even if, let's say an example, if someone didn't have a lot of stuff to pledge for collateral, but there was other compensating factors, I guess it's up to the lender and the SBA to figure out how to structure it to make the package work, right? Maybe more money down, higher interest rate, or more fees, or something to kind of compensate. Now, as far as the downside to SBA, are they? Because a lot of people say, "Well, hey, Angelo, they're really expensive. There's a lot of fees." What's your take on that?
And again, I always, if somebody can get a conventional loan or an SBA loan, we'll always put both in front of them. Based off the conventional, you're here. Based off the SBA, you're here. And even with the additional fees, because of being able to go on a higher loan to value, because of being able to build in working capital, 9 times out of 10, I do have people that sway to the SBA because at the end of the day, it's less money out of their pocket, plus the working capital aspect of being able to move forward on their loan, make payroll for 6-7 months. So even though there's more fees, and that fee is also built into the loan, so it's not like you're cutting a check for that. We're building that into that total project cost.
Right.
So, so the fee really, justifies the 75% guarantee that the bank is getting for them to come out with a stronger loan that gives them, a great shot at being successful in what their endeavor is.
Right. Now, and then the other thing I wanted to ask you is there any max loan amount or minimum loan amount?
So the max that you can have under SBA is $5 million. And then some people will say, well, if I change entities, is that 5 million, 5 million? No, they're looking at that 5 million per an individual. So if you
really?
and I go into business together, so if you and I go to business together and I have a $5 million SBA and you don't have an SBA loan, if we go on the package together, we're not going to get that loan. So it is $5 million on per SBA.
Okay. I mean, it's interesting. I mean, don't you I guess I'm talking out of my head right now, but I mean, that seems a little low. I mean, because I would think that in today's world, I don't know, because I know with FHA, I'll tell you this, 10 years ago, I don't know if you remember this, the FHA loan limit was $170,000 in Harris County.
Yep.
Now it's $330,000. It's almost doubled, in 10 years. And so I would just think that they probably got to take a look at that. But obviously, Americans are grateful to have the SBA, and I'm not complaining. I would just think that, maybe 25 million or something, something like that. But I guess after 5 million, that's when you got to start looking at, I guess, conventional or CMBS or capital markets or something else. I mean,
yeah. So the key word is small business. So it's time for that small business.
Okay.
But you do have, and maybe we'll do another segment where we'll go through 504 and I can show the strengths of a 504. But the 504 to me is a very strong loan for somebody looking, to buy equipment or real estate. But with that, you can do the 5 million plus the bank loan. So you can go pretty high, utilizing the 504 loan and acquiring real estate.
Okay, so you can stack the loan.
Yes.
That's what you're saying.
So that would be a good one for us to talk about next week.
Okay. I like that.
There's a need out there for 504, and there's a lot of opportunities for 504.
Okay, that's very interesting. I didn't even think about that until you mentioned that, because I'm sure there's a lot of clientele that we have that would work well for that. Okay. So no, Rob, I really appreciate you guys. And then, so, like I said, everyone out there that's watching this, Robert Lewis is a commercial, chief lending officer expert with Guerrilla Finance and a partner of ours. And so who we really rely on for our commercial and our business banking. So I really appreciate you being on the show today. Did I miss anything about the SBA that you want? Because I know you know more about it than I do. Is there anything you want to let the viewers know?
No, and a lot of people look down on SBA. And it's amazing how many times I'll bring up SBA as their tool, and it kind of reminds you, when you bring up FHA to a realtor, and the realtor's like, oh no, I don't want to do FHA. But FHA is a strength. FHA is a very good loan, and FHA gets a lot of people into housing. SBA is the same way. The only, it's the downfall. It's a little bit more work. We kill a lot more trees. But from the strength of being able to get somebody in a business or grow their business, the SBA has so many strengths and so many variables that definitely is a tool that we will, especially coming out of this pandemic, that we're going to see a lot more uses for SBA, because banks are going to be looking for that guarantee to take a little bit more risk and to be able to still help that small business.
Yeah. I like it. Well, thank you so much for being on the show. I know your time is very valuable. You're a very busy man. Everyone out there in the world, if you need funding, if you're a business operator, even if you're looking to do a startup, maybe it's a distillery, maybe it's a restaurant, maybe it's a hotel, reach out to us, because like what Mr. Lewis said, you may have gone to your local bank and they do SBA, but then maybe they denied you because their lender overlays or guidelines, they don't like the deal.
Right.
That doesn't mean that SBA doesn't want to do it. And when you deal with someone that represents hundreds of banks that can find the one that's perfect for you, you're dealing with an expert, and the packaging, the structuring is really where it comes down to. I've closed probably about $500 million in loans in the last 10 years that got denied from other lenders. Yeah. And I just repackaged it. And from the repackaging and sent it to the right investor, we're able to get it closed. Now, so the takeaway is that don't give up and don't think that you can't get a loan because your bank's closed or they told you no. Reach out to us at 832-431-6331. You can also click on the link below to get signed up. We want to help you guys. The maximum is $5 million, but we have we obviously are a private lender. We work with many banks. We can go up to, I've done deals as high as $100, $200 million. So don't think that our maximum is $5 million. We'd love to take on your business in any way we can. So please reach out to us, call us if you have any questions, you need anything. Again, we lend nationwide, all 50 states, and also international as well on some opportunities. So thank you so much, Mr. Lewis, for being on the show today.
Oh, no, I enjoy working with you. It's a good partnership.
Yeah, absolutely. Yeah. Thank you so much. Take care. Thank you.
Thank you.
Bye.
Bye-bye.